Good afternoon, everybody. Welcome to Market Mavericks. We're back on Thursday. It is 3 p.m. Eastern time, and we're here to talk markets. So, Scott and Mike, what do we have going on here? Talk to me about Nvidia. Talk to me about Bitcoin. Where are we going?
Go ahead, Mike.
No, you start. If it's
No one wants to touch that one,
Nvidia,
huh?
you first, Scott.
Well, we were mentioning right before the show, I kind of giggled that I thought Nvidia earnings were good yesterday. They smashed. It was incredible. They had beat all expectations. They had, even with the high expectations. And then today I'm reading the articles. It says market now losing gains based on Nvidia's disappointment. So I don't know what in 18 hours or 20 hours what changed from Nvidia smashing earnings to us being disappointed that Nvidia beat their earnings, but it makes it almost impossible to read, listen, or talk about it, because if they beat expectations, and we know the expectations have been exceptionally high and a higher bar each time, you would think that would be good news. I think a lot of people are selling into it, but of course we had Nvidia down immediately after hours significantly. But everything else was up. Now everything's down. So
yeah. Do you think that sometimes that it doesn't even matter what the news is, like the move is already predestined kind of thing?
Yeah. I'd like to tilt over that a little. That's the most powerful force in all markets, and it certainly happens much more frequently in commodities. It's called the high price cure. Usually comes from farmers, and I just playing with Nvidia a little bit compared to Cisco. I don't trade stocks anymore. I don't trade hardly anything, which keeps my view open. And that is, it got up about 3 times its 100-week moving average. That was basically about the peak for Cisco in 1999. I remember, some of us remember trading those, and the market didn't, the stock didn't actually peak right then, but it's just a classic example of over leveraged momentum. And now it's just more bots and algos. And at some point you just get to the point, it's just too high. And that's what's happening. And that's what happened in 1929, what happened in 1987, what happened in 1999, what happened in 1973. That's just how it happens. The thing is that's different, I think, this time is it's so U.S. centric. It's so expensive, the U.S. stock market, that just a little normal reversion, I think, will have severe deflationary dominoes. I just say if you get back to 100-week moving average in S&P 500. It's what we do all the time. We were there in October. That's pretty serious stuff. That it's just normal, and that's just how far we are.
Do you think that there's a situation where the U.S. has sucked up a lot of money globally over the since let's say 2009 because of the Fed being kind of top dog out there? Interest rates generally, compared to the rest of the world, have been somewhat on the higher side. So does that cause a lot of money to flow here that elevates equity prices?
Absolutely. You see that in the dollar. So this is a lesson I learned from our chief equity strategist, Dina Martin Adams. The U.S. stock market, S&P 500 versus the MSCI ex-U.S. stock market index, goes back maybe 40 years. It's the most expensive ever. And that trend, at least for the last 14 or 15 years, has been completely correlated with the dollar. So it's major strength. I mean, obviously there's major benefits. It's great to have U.S. exceptionalism, but at some point it gets too expensive. I think the statistic I heard is we're basically about $60 trillion market cap, and that's about 60% of total stock market cap of the world, yet we're only 20-25% in GDP. So at some point it just gets stretched a little too far and it comes in, and to me that's what I'm seeing beginning to happen, certainly in commodities. Gold's the only one up. It's record high again today. Commodities are down 30% from the peak. And everything is just, commodities look like that high price cure is kicking in. Like we just mentioned pre-show a little bit, Gareth, you're pointing out the low prices in wheat and corn and stuff. Well, those are just, that's where the high price cure really starts. And those commodities have reached multi-decade lows. Natural gas has reached multi-decade lows. Looks like crude oil is going to go there. And the only thing really holding everything up, is that U.S. stock market.
What, Scott, turning to kind of like the crypto markets, obviously we saw kind of late or early this week, there was a flush in Bitcoin, kind of came back below 60,000. Is there anything like, what's causing this type of action? Is it more stock market related and risk asset related, or is it just chop? I mean, what about the inflows? Are we still seeing inflows into these ETFs? I mean, what's the latest on that?
There was actually, I think, a 9-day inflow streak into Bitcoin ETFs that ended a day or two ago, but it's really hard to read at this point how the inflows or outflows are affecting the market. I would actually say you have a more likely chance that people will buy or sell the ETF based on what the price of Bitcoin is doing, right? Not the opposite. But But this is tough, man. You look at a weekly chart. I can't get too upset about this after this, right? I mean, we went from 15 to 74. And frankly, risk assets have done fine. So if it was correlated to risk assets, we'd be talking about it like the Qs and like SPX or something that's just, a hair's breadth away from all-time highs. I know Mike will tell you that it's leading, which means SPX is coming down. But for now, it can either be leading or it can be correlated directly, but it can't be both. You know what I mean? But when we look, I think, at what Bitcoin's doing right now, it's the same as every single summer in this part of the cycle. And maybe it won't, maybe it will, but I don't think that Bitcoin at 59,000 is scary. I think it'll ramp up in the fall. Like I said, maybe it won't, or maybe it will. But this is basically, you kind of draw a line through this area. We've been somewhere touching 60,000 basically since March, or even back to February, right? 10,000 here below, 10,000 there above, but 60,000 is pretty good when, we were down here a year ago.
So that I agree with. I want to show a few charts that are part of the reason I'm really concerned about Bitcoin, and also as a leading indicator. And Scott and Gareth I've been quite bullish Bitcoin in the past. I'm just bearish now and just pointing out facts. This is just a monthly chart. So if it's the month end right now, see that this is Bitcoin breaking down, and gold and S&P 500 still heading higher. Yes, maybe it's a back and fill and it's going to go back up, but that's the problem. If beta is so stretched and beta rolls over, Bitcoin's just leading the way. And I just want to show you a few other charts that really have me concerned about it. You look at Bitcoin versus the S&P 500. It's about 11 S&P 500 indexes for one Bitcoin. Now, we know the peak was much higher, about 2021. But what's significant is we can easily get back to 7 S&P 500s to one Bitcoin. That was the peak in 2017. That's a significant peak. That's where we launched futures. That's where I really got into the game, because futures are my background. But if you overlay this with the S&P 500 versus its 100-week moving average, this is never a spot you want to be overweight long risk assets. And the point is, Bitcoin's one of the riskiest assets out there. Same thing with gold, Bitcoin versus gold. 24 Bitcoins per one, 24 ounces of gold per one Bitcoin. I mean, it's showing lower highs. It can easily go back to 15. It means nothing in the big picture. That was the highest for 2017. Remember the ETF launches. And again, overlay that with the S&P 500 versus that's a 100-week moving average. Just show that ratio. It's about 25% above there. It's not a level. I mean, I just look at managed money. Most people don't go out of the way to get long. I mean, retail does. But I just want to show you a few things that's really happening I find significant. From a commodity standpoint, this is the 100-week moving average of industrial metals. It's rolling over. So it's showing a global tilt towards recession. Yet the 100-week moving average S&P 500 still heading higher. The significance is this is something you rarely see. This is one where I kick in my pattern recognition radar, and is when you see a market has virtually no volatility, that's when you get the volatility. At some point it breaks, and that's what I'm worried about happening. I think Bitcoin's a leading indicator. So I'll pause there, but I'll mention one thing. Every time the Fed started easing, you'd see these are 100-week moving averages. They roll over after they start easing. Industrial metals roll over. S&P 500 rolls over after it starts easing. Here we had a little blip, but to me, that's what the big picture is, and that's where we're probably going to go. Is at some point you need a trigger, and maybe that is now already with the stock market just up too much, way too high. It's 2 times market cap GDP. And I mentioned earlier, this Nvidia just reminds me of Cisco 25 years ago.
So just going back to Bitcoin, so I agree that it's obviously a risk asset. But the question I guess I would have is it slowly, in your opinion, Mike, and I think, Scott, I know where you're going with this too, where you'd go, is that it seems to me that it's becoming less of a risk asset. So like if you looked at it in 2017 or 2021,
Absolutely.
It seems like volatility is slowly coming out. Now, it may still take 5 or 10 years for it, but it does seem like it's on a path to maybe be a digital gold versus just a risk asset.
That, unfortunately, that process stopped when it peaked in 2017. It was about annual volatility in Bitcoin was about 8 to 10 times gold and S&P 500. Now it's about 3, but it's been stuck at 3 for a number of years. So I think it's going there. The thing is, it's not cherry picking levels. It's showing significant paradigm shifts in market and showing what's happened. What happened here was the launch of ETFs. Now, some of us waited for that for a decade, and we're really involved. That was a significant event at the same time of the high halving, at the same time that the stock market is making record highs. So we had a significant event, and it's rolling over for the event. So right now, as Scott points out, yes, it's just a hangover if you look at it alone. But the point is, the massive world getting into Bitcoin, you views it in a broader space of their portfolio. If it's going to underperform, and it has been, their broad Qs or Nvidias or even S&P 500, even gold, that's a problem. So it's got to start showing the oomph. It's started showing the upside. So here's my point: is I think Bitcoin is going to become attractive when it goes back to its enduring level versus, in this case versus gold around 15x, in this case versus 500 around 7x. And it's just still too expensive. That's basically, it's so not profound to say that, particularly when you have the stock market at record highs, the Fed just starting to ease, the disinverted curve just started to go back to in disinversion, and unemployment bottoming from a multi-decade low.
Where would that? Sorry, I was going to say, do you have a price point on Bitcoin where that 15 multiple would
mid-30s. I'm just pointing out right now, it's mid-30s is a standard 50% correction. Standard. Everybody who's held Bitcoin for a long time knows, it's nothing. You get right now, we've only had 25%. And
yeah, but that's only based on if this is the top, and if you look at previous cycles, this is on the way up to new highs. Not if this is the dead top, we should be looking for 85%, not 50%.
So I'm glad you pointed that out, Scott. I'm just trying to be conservative at the moment, because that's one thing I have to be careful with when I pointed out facts of my analysis without a bias. Sometimes you have to remember your audience. And I do know a lot of people are very long and get offended when you point out facts of markets that they might have a vested interest in. And that to me is, but right now I'm just number one thing at a time. This is the status right now. I just need to see a little bit of back and fill in the stock market to feel more comfortable about being long copper, being bullish crude oil, being bullish commodities, and Bitcoin's just in that space. I'm indiscriminate. That's also just one of the best leading indicators. The key thing I like to point about Bitcoin is the facts have changed for Bitcoin. We've got ETFs, we've had the halving, that all that stuff we looked at in the past where it had its, GBTC had significant discounts or its major ARBs and futures. The stuff I heard, I would get the questions from clients and ex-clients is like, Mike, tell me about this, tell me that. I don't get those questions anymore. I'm just pointing out that next big trade has kind of passed for now.
Scott, I'm looking at the Ethereum chart here, and this chart looks so horrible compared to Bitcoin, at least to me, in terms of its inability to take out the previous all-time high. Like Bitcoin took it out. It had the run, but even on the ETF, it was kind of like a dud. Like comparatively, it was a non-event. We haven't seen the same hype around it. Price has now come down to levels that it saw in December of 2023. I mean, what's your take on Ethereum? What's going on here?
Listen, I think that we're in the depths of summer, the summer doldrums. If you look at the 4-year cycle, you know that this is exactly where altcoins should be if Bitcoin even hadn't have made that run up. As I've said, if we didn't have the ETFs, we'd be trading at $40,000 Bitcoin. Everyone would be saying, that's pretty good. We're double where we were at the bottom. And altcoins would be dead and nobody would be complaining because they'd be waiting. What was different this time is that obviously Bitcoin had the run on the ETFs. But yes, I mean, it's very clear that this is a time to be in Bitcoin if you're going to be in anything. And that's been the case for many, many months. Something we've been saying here, something I said literally in March when meme coins were going crazy. I said, watch out. It's about to get really gross for altcoins and really boring for Bitcoin for the next 6 months. But I think that Ethereum will absolutely fly at some point when more money comes in. The problem is anything that came into Bitcoin is not trickling down because it came in through ETFs, right? You don't buy Bitcoin in a BlackRock ETF in your IRA, and then when you get bored, you can't sell that into like Solana, right? Or a meme coin. The past cycles, people would take their spot Bitcoin, get bored, funnel down into altcoins, and that was the cycle. So we're going to have some actual new retail coming into the native spot crypto markets for that to happen, which I do believe will happen in the future. But just going back to Bitcoin, if you look at the monthly and opens and closes since March, when I said that would likely happen, we're talking about a 15% range in monthly closes for almost 6 months. I mean, Bitcoin is dead. This isn't dead going to zero. I'm saying dead as far as volatility. I don't see how we can compare this to anything when other markets have been going so absolutely crazy. I mean, you go back any summer, these are the summers. You have this summer, last summer before it went up. We just had this long, boring consolidation. This could be distribution. I have no idea. I mean, to Mike's point, by the way, we had the 65,000 high drop to below 30. So that was a 50% retrace, right? And then back up to 69. So if that happened, Mike would actually be right. And he'd probably at 30 say, okay, enough. We go back up, right? But if this is a real high, then we need to pack it in for years and look for an 80-something% retrace. So, I just don't see, I see this as consolidation after a massive move from 15,000 to 74,000. I just don't see the expectation that this would have done anything. You shouldn't have continued up from that, right? To his point, he's right. The ETF hype ended. We had that trade, but we're still trading, $12,000 above when the ETFs were approved. That's 25% above the approval. It's pretty good.
It is. It is. And I would just say too, is that the channel, there's a bullish channel on it. I think and I agree 100%. I mean, this is consolidation. There's no doubt about it. The only fear that I have is more that the stock market has a major corrective move.
That will be a problem.
And then that could potentially eventually, wear down Bitcoin. And I want to show you guys this and get your reaction to this. I was doing some research. In weekends, usually I look at the bigger time frames, and I was comparing the current S&P chart to 2007, and it's eerily, and I say eerily similar. And so what we see here, guys, look at this. You had this up move, which was a bull run up. We had a 6% drop with a low. We then had the next bull run, right? We made our all-time high there. We had a 10% drop, a higher low, and then we've shot up almost to all-time highs. And if we go back to 07, big run up, 6% correction, so identical correction percentage-wise, low, big bull run, 11% drop. So the one currently was 10%, but this one's 11, and here we've shot up almost to all-time highs, right? Or we did back in 07, we shot up and actually made a brief all-time high right here before we obviously know what happened after that, right?
That looks like the 65 and 69 highs on Bitcoin just on steroids too. Yeah.
Right there.
So right there. Can I follow up on that? Because that was 2007 was a really rough year for me. I was trading actively, partly because I had my best year ever in 2008, and I just got the same signals you pointed out there, same things I'm feeling now. What was the VIX looking like then compared to now? Because that's what was my key signal back then. It was just too low, and at some point it's going to revert up, and I sense it right now.
That's a great question. Yeah, I'm going to go back on my weekly and take a look back here. I'll show my chart for you guys here. But going back to the weekly, so yeah, I mean, this is the kicker, right? Is the VIX in
how long and low it was?
So back in 07, right, or 06 to early 07, it was down trading basically sub 11. And I think we were trading in the 11s just before this latest move. Yeah. And then you got the beginnings of the more volatile period, which you've talked about, Mike. You've said we're out of the volatility is going to slowly start to increase here. And then obviously we know in late 08, 09 is when we had that meteoric spike. Now, we did just have that crazy spike on the VIX to 65, which was pretty unusual. But you're right. I mean, the VIX was down there and everyone thought everything was fine back then and nothing would ever hurt the market. And that time was different, right? It was supposed to be different.
Well, that's one thing that always happens. I'm enjoying reading Howard Marks' book lately. Right now, it's kind of just the stuff I've been writing about. It's quite good. But I want to show you one chart. To me, I want to focus a little bit on what I think is the NBT, the next big trade. And that is, I just show you the same thing. That's the VIX, but I subtract out the S&P, the effect of the Fed funds rate to just show you how this is a 50-week average. It's the lowest since 2007. It's just starting to bottom. But what's significant is I just like to point out, this is gold divided by S&P 500. You get a little up reversion in the VIX, and that's one lesson you always learn about volatility. It always mean reverse. It's just a question of when, what sparks it. That's the next big trade, I think, is gold going up versus S&P 500, which probably means S&P 500 going down and maybe gold not going down as much. But I just want to tilt a little something I think that's happening from a commodity guy and crude oil with something that's, crude oil to me is on a cliff's edge. It's just ready to drop. And that's going to be part of, I think, this whole next big trade that's going to filter over to what I think is going to be long bonds and gold. This is a crude oil chart. This is Brent. It's hovering on the support line, but a good reason for it to go lower is what's happening in China. Got to watch these Chinese CGBs. This is a Chinese 10-year. It's plunging. Now, see that correlation in the past? It was pretty close. So to me, this is also another thing. This is the Bloomberg Energy Index divided by gold, and it's had a very high correlation with the U.S. 10-year note. The U.S. 10-year note right now is about 160 basis points above China. It's like it typically trades at a 65 or 60 basis point premium in yield, but now it's a discount, but now it's a premium. It just to me, at some point, there's the next big trade here is, yes, we can mutter around here in the stock market forever. And at some point, I think we're going to get something like this. With all this is going to mean revert U.S. 10-year notes yields drop
Mike,
towards,
what are those red vertical zones?
That's recessions.
Okay.
Yeah, so just marking recessions, and that's one thing that we know that's never going to happen. But that's the key thing I like to think that's, that pendulum for no recession, or that for severe recession a year ago that was wrong and swung all the way away from no recession, just starting to tilt back. And you see that. And one thing I was struck at this morning, I looked at, there's a metric and a term I enjoy. It's called economic surprises. There's probably a dozen of them for every country, most notably for the U.S. and the world, and almost every thing I looked at, our economic surprises are lower. I mean, you just measure what's the surprise in all the indices you look at. I mean, is unemployment higher or lower? And they're all negative at the moment. So it's just leading. Maybe it's a potential for the catch up of what the distortions of pandemic. And that's what I think you see here. Also, it's just, this is what I look at is I'm still bullish gold. And it's out, it's, if you're holding gold for 3 years now, you're beating the S&P 500. And I don't hear anybody talking about AI and gold much lately.
Yeah, I think that's a great point too. And with Nvidia's earnings, I think the key with Nvidia's earnings is they were great earnings, but they just weren't good enough to keep the bubble expanding, right? And at some point, we know that margins contract, right? It happened with Tesla, and I use Tesla because I think it's such a great case where in 2021, Tesla was dominating the EV sector, was the only game in town. The hype had run it way up, and then it corrected 75%. And I think, you look at the AI trade, it's really probably been the main driver of the latest bull run from probably October of last year through now. And if that's faltering, what's the next catalyst? Is there a new catalyst to take the stock market back up versus, starting to see that bigger rollover that we're seeing? So,
well, I'm worried about the big picture macro that we all appreciate from Jeff Booth, the price of tomorrow, and that is rapidly advancing technology. Now, what's happening to Tesla? I can buy a BYD car from China. Obviously, I can't buy it because we have to have tariffs to prevent these vehicles coming to this country and in Europe and Germany. It's going to crush domestic automotive manufacturers. But at half the price I can get here, it doubled the efficiency. And so what's happening to Tesla? Well, Chinese stole their technology. I mean, I would if I were them. They did. What's happening to Apple? Huawei just announced that they're doing better. And it's at some point, it's always happens. And, right now Nvidia's on this, it's the star to shoot at. And believe me, there's people shooting at it.
Yeah. Scott, one question I had about the crypto markets, are you seeing any slowdown now? I mean, it's obviously the summer, but like, is there a significant slowdown in interest in crypto right now? Yeah, there is.
Oh, absolutely. I think we're at that point where people have just checked out. The only people left are the ones bitching and complaining to each other on Twitter about which meme coin's going up and down. Nobody seems particularly interested in inflows and outflows and any of the metrics. And to me, that's literally just August and September in crypto, and we've seen it over and over and over again. So it doesn't necessarily bother me. And I think, the plumbing is still good. You talk to the guys at Bitwise and they say, all these wirehouses are going to come on finally in the fall and into the winter. And we just saw that Morgan Stanley turned on, and we know that UBS and all these are coming. So institutionally, I think we're still building, but that's not what like the retail gamblers want to see, right? They just want to see exciting price action. We all know that higher prices beget higher prices, right? So any significant movement is going to get interest back really, really fast. It doesn't take much for there to be a catalyst in crypto. Like if ETH goes up 20% or something, I bet all coins fly, So it's going to be interesting to see what happens. It's hard when you're in it not to say, holy crap, I'm scared. This is going to drop. Where is everybody? We're dead. But, if you had a plan, my base case has been, this is exactly what would be happening in August. I can't get too upset that it's happening in August. Right?
Yeah. And by the way, I still remember what you said back in March of 2024 when the meme coins were going nuts again and people were calling for an altcoin season. And you said, this isn't the way.
This is the top, not the bottom of something like that.
Yep. And that's exactly, I mean, some of these charts on these alt, I mean, the alts did have like a 20-30% bounce, but that's like running your mill bounce for them. But yeah, I mean, they are just, they've got
ADA, XRP, the big names, these are down 90%. Yeah. I mean, there's never been a movement for these. You can't be confused that Solana ran. Okay. So that was the altcoin season with Solana. right? There were these little moves, AI or adjacent coins or RWA, real world asset coins, these little sort of sectors that would have their 2 or 3 weeks. But it was Solana, which was the most disproportionately beat down by FTX and Sam Bankman-Fried token that there was. So the very fact that Solana didn't die at $8 and that people stuck around and their developers stuck around meant that its mean reversion, just like getting back to where it should be, was the trade of the century, right? Because you could have just made the argument at that point, the highs was in the mid 200s. If it was even down to 100, that was probably decent value, and you're sitting at $8.
Amazing.
So I think the fear surrounding FTX and SBF really beat Solana down, gave it a lot more room to run just to catch up. And that caught that momentum where, like I said, once you get the momentum and prices go up, you get the FOMO and it overshoots. And then it kind of came back down to a normal value, but nothing else has run. That's why people are so frustrated and angry. They saw Bitcoin go up and they're 90% exposed to altcoins in this market, and those haven't run. And you get this impression that a bunch of people are getting rich and you're not, and they're depressed. But we just haven't seen the movement at all. I'm hoping that we will. But
Scott, what you described, I think, is what I find so fascinating in this space is the amount of speculative excesses, and just it's okay. I mean, I'm from that environment, born and raised in the trading pits in Chicago. But it's the key thing I also enjoy about Bitcoin is sometimes when you express an opinion that's a counter to what someone agrees and they get angry with you, their position, they're overweight. And it's like, good luck. And I get that a lot lately. So I'm sorry, but you mentioned it's just a lot of speculation, and that's okay. But just know one lesson we learned in trading pits is never trade without stops.
Well, and try to trade without emotion too, right? I mean, essentially, it's the emotion is what gets people, not only in crypto but in stocks and everything else, is that emotion kicks in. And the markets, again, the markets are almost, I always said, like, the markets are almost like an entity that's alive. Like, it knows just the buttons or the levels to push things to make you make the wrong decision.
Maximum pain,
on your
right?
coins.
Direction of maximum pain.
Yeah, absolutely. All right. So Mike, you were talking about how money has obviously been sucked into the US, and you were talking about China, oil maybe dropping because of China. Is there a trade here, like a reversion trade potentially in China, or is it like stay the heck away, it's too risky?
Exactly. I've been thinking that for a while. You look at the Hang Seng, the Hang Seng Index divided by S&P 500. It's just plunging. And it was up on a good uptrend until like the last 10 years. I fully expect the Chinese to do what the Japanese have done. And our ETF people have written about that, Eric Balchunas and James Seifert. They should come in and start buying their own market. I mean, they have to support it. But they're doing less than I had thought. And I think partly because that's how bad things are. Everything I read on the Bloomberg terminal, I type in BI China, NI China. It's just how bad the housing market. The statistic I heard recently is our housing market peaked around 10% of GDP in 2006. Theirs is still around 30%, and that's just heading lower. So I look at China as just a classic case of mean reversion of a rapidly expanding emerging market, and it's going to go down in history as, to use American vernacular, and people look back at what happened and say, Mr. Z, what were you thinking when you did that unlimited friendship? Because that shifted the world with the ex-enemy of the US, and it's just get me out of China right now. So and you've seen that in bond yields, which I show here. You've seen that in the stock market, and I don't think it's going to get better. There'll be bumps in the road, but that's where I look at it. The inordinate burden U.S. stock market has to stay strong. But it's also the rest of the world realizes they can't really do business in China anymore because it's not China, it's President Xi.
Yeah, it does make it tough when you never know what news headlines could come out. And there's always that lurking Taiwan situation, potentially invasion of Taiwan, that makes investors like myself. I mean, I have small positions that I've accumulated, but it's, I look at the valuations of Alibaba at eight times PE, right? A PE of eight times earnings. And it's like, man, that's like super low. But then you're like, yeah, but there's these risks, and it just makes it so hard to kind of go in heavy on some of these trades. So
here's a question. Here's a question for you in the chat and our audience on Taiwan. So when Saddam Hussein invaded Kuwait, U.S. seized about 30 billion of assets. When President Putin invaded Ukraine, we've seized us and European seized about 30 300 billion of their assets. Just imagine if there was a Chinese invasion of Taiwan, how many assets would be seized? I mean, they do other IPOs here. There's just such a massive amount of money that would be. It's just kind of from an economic standpoint. And what would stop that from happening? I mean, all wars right now are really, I mean, obviously they're Cold War 2.0 and hot, but also a lot of them are economic. And that's just something I think that to lay out there. If that were to happen, the amount of assets would be locked up is just striking.
Yeah, the one thing I do wonder is like, I mean, first of all, with Iraq and Saddam Hussein, there was really no impact in terms of the U.S. economically, right? I mean, oil did spike, of course, but same thing with Russia. How much trade did we have with Russia? Was it a big impact versus does China have a much stronger leg to stand on in terms of us being like, yeah, we're not happy about you guys doing this, but we can't screw ourselves over, especially if the U.S. is heading potentially into a recession. So just things for people to think about. Cool. All right, guys. Well, it's 3:30. Let's call it a day. Thank you, guys. Great discussion. I love these discussions, guys. Amazing. I hope everyone enjoyed it out there. Follow these gentlemen below on their socials there on X. And if all is good, we'll do this next week again. All right, guys. Have a great one. Thanks again.
Thanks, guys.